Hi, I'm Tom Pigeon. I'm one of the portfolio managers on NORTHCAPE Capital's emerging market strategy. Our strategy looks to invest in a select number of high quality companies within the emerging markets, typically about 25 to 35 companies. When we say quality, what we're looking for is companies with very strong environmental, social and governance standards, companies with strong alignment between management incentives and the interests of shareholders like ourselves. We're also looking for companies with a strong competitive position in the markets they operate in, and that's reflected in good returns. And finally, we're looking for companies with good growth prospects. And that means they've got good opportunities to reinvest in their business, be it physical capital or in activities such as R&D. If we can find these companies and invest in them at a reasonable price, then our experience is these type of companies tend to outperform the overall market over the medium to long term. These companies also tend to display lower volatility, so our portfolio over time has tended to perform well when there's financial and market stress. Obviously, the COVID-19 pandemic has dominated investment markets in 2020. But we think the impact of the COVID-19 will be ongoing for several years post the production of a vaccine, maybe next year, maybe early 2022. One of the things that we see is that governments are going to look to stockpile PPE, things such as masks, examination gloves and the like, as they prepare for the next pandemic. They really don't want to get caught with their pants down again, as they did earlier this year in March. This is going to be a multi-year process of restocking. If we look at it, it's going to involve the acquisition of literally billions of gloves. So even though companies such as Top Glove, which is a Malaysian glove company, examination glove company, has performed extremely well this year, we think investment markets still underestimate the medium-term outlook for this company, and hence we continue to hold a good position in this company, not just for the next 6 months while the pandemic's going, but for the next 5 years as this restocking process occurs. You know, we've seen the rubber glove companies previously really perform well post pandemic as governments and medical institutions realise the need for this simple but effective item really can assist in medical outcomes. So we expect growth to accelerate from here, even though the growth's been very strong for the company in the last 12 months. One sector of emerging markets where we continue to see risks is in the Chinese internet names, such as Alibaba and Tencent. Two things that are very important for us: corporate governance and alignment of management with minority shareholders such as ourselves. Unfortunately, these companies, the structure of the companies, the way that the ownership works, we see relatively poor governance standards and low alignment between management and majority owners and us. And given that, even though these stocks have performed well, as a long-term investor, we don't want to put our clients in front of those risks. We don't see those risks as acceptable, and hence we don't hold these companies. If you'd asked me 12 months ago what to expect for equity markets, I wouldn't have predicted the pandemic. I wouldn't have predicted the biggest economic decline since the Great Depression. So looking forward, I'm a little gun shy in making a prediction. But if we look at what happened this year, we saw emerging market financial systems being very resilient to the economic shock of the pandemic. And we still see plenty of opportunities to invest in high quality, high returning, high growth stocks at a reasonable price. And I think as we go through the year, markets will start to look at the end of the pandemic. So we're quietly confident for emerging markets going into 2021.